Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get through the three things you need to know today. First up, U.S. stock futures mixed this morning, but getting a boost from the tech sector after Alphabet beat sales and profit estimates amid demand for its AI products. Google's parent company also said 2025 capital expenditures will be $85 billion. That's $10 billion more than an earlier forecast, as they say the investments are necessary to keep up with customer needs for artificial intelligence. Plus, Tesla warning on a tough road ahead. Tesla shares are sinking this morning after the car maker reported one of its worst quarters of the last decade. CEO Elon Musk saying Tesla will be in a transition period for the next year or more as it loses electric vehicle incentives in the U.S. and needs more time to roll out autonomous vehicles. And President Trump out with a tariff update. The president saying his so-called reciprocal tariffs will not go below 15% and could go as high as 50% for some countries. The comments coming ahead of his August 1st deadline to implement the levies and represent the latest twist in his efforts to impose duties on nearly every U.S. trading partner. Let's get a check-in on stock futures. We saw the S&P and the NASDAQ again yesterday, each closing at records. So they look to potentially extend those gains today. But the hold on gains for the S&P futures, a little bit tenuous here, could be pointing to a higher open, but it's very modest. The NASDAQ, though, showing stronger indications for a higher open. Those futures up about 0.2%. And the NASDAQ indicating a lower open here this morning. Let's turn now to our top stories of the day, and it is all about earnings. Alphabet shares jumping as the company sees strong demand for its AI products. Tesla CEO Elon Musk warning of a tough road ahead for the company. Joining me now, senior reporters Ali Canal, Josh Schaefer, and Pras Subramanian. Pras, I'm going to start with you. You and I talked yesterday, and you had three things that you were looking for. I gotta admit, we got news on one of those that surprised me, the more affordable Tesla model. But how did they meet? How did the company sort of meet what you were looking for?
Yeah, that more affordable car, Tesla then revealed that that car is going to be coming into volume production in the back half of the year. So sort of confirming that the car is still happening this year. Whether we see it or not is another story, but it's going to be hitting that volume production at the end of 2025. So that part was good. Robotaxi news, not that sort of in depth. We just heard about possible expansion into new areas. They want to eventually go into California, obviously, and then, but no real mention about when they're going to take away that safety driver and things like that. But they were sort of kind of coy on future expansion for that. So a few questions there. But I think the biggest question mark, Julie, is that we're talking about the business, the core auto business, right? And basically the CFO is saying that they're going to have to basically pull forward some demand here because of the expiration of that tax credit, and that might lead to a supply crimp at the end of Q3, meaning fewer sales. And when Musk was asked about the EV tax credit, he said, "quote We're in for a few rough quarters." He said, "Probably could have a few rough quarters as a result of this." And he said, "quote I'm not saying that we will, but we could." And that really kind of hit shares in the aftermarket and during the call. And now we're seeing it down 7%. So it's that core auto business that being impacted by Trump's BBB that is really hitting the stock here right now.
It is definitely hitting the stock right now. And Josh, has the faith-based story for Tesla run out of a little bit of juice here?
It feels like it, Julie, right? I mean, Tesla earnings are always kind of a story of what story Elon Musk can tell, right? It is not ever really about necessarily what the company is doing with its core auto business. I don't think most street analysts that we talk to are talking about the core auto business and that being a key driver of why they would have a price target in the 400s or the 500s on this stock, right? It is a story about what is to come tomorrow. And right now, what is coming tomorrow just feels pretty far out, right? And I think even when you think about robo-taxis and you think about the competition that Pras has been covering pretty significantly, right? When you see Uber getting further into autonomous driving, of course, you have Waymo's already on the road in areas of the country. And I think you just sit back and sort of say to yourself, okay, well, when is Tesla really getting into this space? This game is happening right now, and it feels like Tesla isn't fully involved in it at this point. And then you just wonder in general, after the last several months of Musk back and forth with the government, if investors are maybe just getting a little bit sick of the Elon story here, and he's just becoming a harder voice to listen to, because there's certainly been quarters where Tesla's financials have not looked great, but he has come on the call and talked about robots and talked about the future and talked about things that are going to come in 5 to 10 years, and the stock is up, right? Right now, the stock is not up because the near-term story continues to just be challenging.
Yeah, Ali, you flagged his predictions on Optimus 3, the robot, right? And the big ambitions still for how many of those things they're going to make, but investors are not biting this time.
Yeah, it feels like Tesla is caught in the middle between the company that it is or was, which is that pure play EV powerhouse, and the company that it really wants to be, which is relying on artificial intelligence, robotaxis, robots. And like Josh was saying, that just feels very far out at this point. So investor concerns are definitely valid that in the near term, the part of the business that's making the money, the EV business, is slowing considerably, both in the US and abroad. We have intense competition on that front. We did have the reveal of that cheaper EV model, and I agree with you, Julie, that's something that surprised me as well. But we need that to get to market ASAP because this competition is so intense at this point. So for me, the bulls are really focused on the future, the possibility here, what Tesla could be. But I think for investors, how much patience do they have to wait to see when we start to see some monetization on that front? And according to Elon Musk, it seems like we're going to have to wait quite a while. We don't really have firm deadlines or targets here. And I think that murkiness is what's creating a lot of this jittery action in the market right now.
Ali, what's interesting is Tesla is sort of stuck in between the present and the future. The future is supposed to be positive. Then you have Alphabet on the other side. And here, the future holds promise, but also threat, right? But the current business, meaning like search right now, this quarter shows is still performing.
Yeah, and search doing very well, and that was flagged heading into earnings because there's a lot of competition with AI. I mean, personally, you can just go to ChatGPT and ask them a question, not necessarily Google, and you're hearing that more and more anecdotally, but the search business was up year over year. It's something that analysts had flagged. We also saw really solid growth across the cloud, obviously a big standout here as we talk about chip demand and AI demand. Also YouTube, and YouTube is the biggest non-premium audio and video platform in the world. It's been consistently cited by the top streamers, including Netflix, as the biggest competition there. So YouTube just continuously outperforming here, also has that ad revenue. And when you look ahead into the future for a company like YouTube, they're taking over more share of TV viewing time. So that's significant as well. Pivotal Research raised its forecast, its price target also to $245 a share. They also said that the risks for the future, which come amid AI competition along with those regulatory hurdles, that's really been priced into the valuation at this point, and that Alphabet shares are currently inexpensive at the current moment. So we talk about the Mag 7, we talk about the future here for companies. It seems like Alphabet, Google, it's just sitting in that sweet spot right now.
Josh, let's talk about also the AI averse, or that's a terrible name for it, but hopefully you have a better name for it. But, meaning they're spending a lot of money looking at where they're spending that money.
Yeah, Julie, it was the first thing that popped out to me out of the release yesterday, right? Boosting CapEx to $85 billion, and it didn't stick out to me necessarily from an Alphabet perspective. It stuck out to me from a broader market perspective. If you listen closely to strategists that have been arguing for this broadening of the stock market rally and picturing areas in the market like utilities, like energy, what they're really talking about is, well, big tech continues to spend on AI. They're going to need to have energy to operate those to operate those AI platforms, right? They're going to need utilities. They're going to use nuclear energy. They're going to buy more chips. That's a semis play as well. This is something that Savita Subramanian and the Bank of America team have essentially been pointing out for over a year now, as they've been talking about a broadening of the stock market rally, saying most of the spending in the S&P 500 right now, over 90% of CapEx, is coming from the large hyperscalers. Those are really the only companies that have been boosting their CapEx spending. But that's a good thing for the broader market because one company's spending is another company's revenue, right? And you've started to see this play out in the market. We should point out the S&P 500 equal weight, which is not overly influenced by large market cap companies, uncertainties, right? That sort of shows some broadening of the rally. That closed at a record close yesterday for the first time in 2025. So we've seen this rally starting to broaden out during earnings. We talked about GE Vernova with a Nest yesterday. That is sort of an AI energy play, right? That stock has been soaring. You're seeing these little bits and pieces starting to come through. And so from a broader market perspective, if you're a bullish investor on the broadening of the AI theme, Google continuing to spend and spend more is seen as a positive for the market. Whether that is a good sign if you are an individual Alphabet investor, we can leave that up to the analysts you'll be speaking with over the next couple hours.
And I will be speaking with them. Good tease there, Josh. Appreciate it. Press Alley, Josh. Good to talk to you. Let's stick with earnings here because we have a lot more to go. Chipotle is one of the companies that reported revenue there falling short in the second quarter, prompting the burrito chain to cut its annual same-store sales forecast for the second time this year. Senior reporter Brooke DePalma is joining us now with more. So not going so great over at Chipotle.
Not going great indeed, and we're seeing investors really reflect upon that same-store sales cut when it comes to their guidance. Shares or Chipotle stock down nearly 13% this morning, extending losses that we saw in after-hours trading on Wednesday after the company once again reported that miss on the top line, that miss on same-store sales growth, and ultimately cut its guidance. Now, the company does expect same-store sales growth to be flat for the year. That's down from the previously expected increase of a low single-digit range. Analysts had been looking for an increase of 0.8% for the year. And the CEO, Scott Boatwright, really saying that this was due to ongoing volatility within the consumer environment. But largely what we saw during this past quarter is customers go less to Chipotle. The foot traffic was lower. And there were so many questions by analysts on the call saying, is this a Chipotle problem? What gives you confidence that this is not just macro, but rather it's a misstep by Chipotle, if there's anything quote unquote self-inflicted? And CEO Scott Boatwright really defended the business here, saying, quote, there's no smoking gun here that says we've had a misstep. That gives us confidence to stay on strategy, innovate where we can, try to meet the consumer where they are in our own unique Chipotle way. And what exactly that way is, Julie, is things that they've done in the past: an increased cadence in marketing spend, an increase in innovation. We saw them launch the Adobo Ranch last quarter. In addition to that, what we also know that they do is they are really trying to double down on that speed of service, that throughput. And then, lastly here, what they really are trying to work on is get those reward members, those loyalty members, to really come in more frequently. But certainly quite a big misstep. This was the worst quarter when it comes to same-store sales growth since Q2 of 2020.
Well, and all of this begs the question, if things were that bad, will continue to do the same thing work?
Right. And what they're really saying is this is what's worked for Chipotle in the past. They're going to lean into it even more with more dips, more cadence of innovation. Scott Boatwright really reiterating that they still do expect mid-single-digit growth in the near term when it comes to same-store sales growth. And ultimately, by this year, though, being flat, investors are not impressed. This is a company that saw double-digit same-store sales growth in recent years as it had that value perception around it. And that's why we're seeing the stock fall over this morning.
Yeah, definitely. Really interesting. Thanks, Brooke. Appreciate it. Coming up, we're going to catch you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching United Health, Airlines, and Dow. First up, United Health is cooperating with the Justice Department's investigation into its Medicare practices. That's something the company confirmed in a filing. The announcement confirmed earlier reports that the insurance and healthcare giant was under investigation. Earlier this year, the Wall Street Journal reported that United Health was indeed under probe for potential Medicare fraud. United Health called that report, quote, deeply irresponsible, and said it had not been notified of any probe. The share's down about 3%. Next up, shares of American Airlines and Southwest Airlines lower in pre-market after second quarter earnings reports disappointed investors. On the part of Southwest, it missed estimates during the quarter, though it did note that travel demand appeared to be stabilizing. Meanwhile, American Airlines topped expectations in the second quarter, but scaled back its forecast for 2025, reissuing guidance well below the outlook at the start of the year and offering a very, very wide range from a loss to a gain in terms of the potential outcomes. We will be speaking to the CFO of Southwest meantime, which also gave a more negative forecast later in the 10 a.m. hour. And finally, Dow slashing its dividend amid a broader industry downturn. The chemical maker issuing a third quarter revenue outlook that was weaker than expected. Higher production costs in Europe, weaker demand, and regulations have weighed on the industry as of late. Earlier this month, Dow announced it was slashing jobs and closing down 3 plants in Europe in response to challenges in that region. You can scan the QR code below as always to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, President Trump says countries will face 15% to 50% tariff rates ahead of the White House's August 1st trade deadline. That range is higher than the administration previously expressed. From the first announcement of universal 10% tariffs to comments earlier this month implying rates of 10 to 15% on more than 150 countries. Stocks, as we know, have largely shaken off those tariff uncertainties. Here with more is Lisa Schreiber, Gradient Investments investment analyst. Lisa, thanks for being here. So we have had this interesting reaction to tariffs and this sort of flow of tariff headlines. Initially, as we know back in the spring, every time the president opened his mouth to talk about this stuff, we saw pretty dramatic reactions. Now, it's really hard to move the needle. Where's the right place in that equilibrium?
Yeah, you hit the nail on the spot here. What might have been a little overreaction in April, and it's easy to say that in hindsight, right? Might be a little bit underestimation now because a lot of those problems are still with us. And even if trade deal gets done, and there's still a lot of uncertainty, right? And we do not have to forget that even trades are in the making, and that alleviates a little bit of the uncertainties. The actual effective tariff rates still sits at over 15%. Coming from 2.5% before all of that started, right? And the market seems to be, not that worried about that at the moment or anymore. The market is now in earnings season frenzy. It seems the mood is up, but we still should not forget that there is still a lot of uncertainty ahead that can affect companies going forward.
Okay, so we shouldn't forget it. What should we do about it, I guess, is the question. Do we, instead of sort of looking at the whole market, should investors be trying to identify the specific sectors or companies where there could be more of an effect?
Of course, there are sectors that are less affected by tariffs. And also, as we are getting trade deals done, we see, okay, what countries are actually, we are getting the trade deals, what sectors might be more affected than others. When we look at the EU, which is a lot of industrials, a lot of pharmaceuticals, right? On the other side, there was talks about copper tariffs. So that affects different areas differently, of course. And now we are in the middle of earnings season. So some companies are already reported, which was very positive so far. But especially when we look at the retail sector, which is on the forefront of tariffs and on the forefront of the whole downturn that didn't get a lot of investors' love to begin with because they're exposed to tariffs. So that will be interesting to see how they are dealing with it. Inventories are slowly wearing down, that they're piled up before Liberation Day. So we are seeing what the outlook is there, and that will be a guiding forward.
On the tariff front, I want to get to some of your stock picks. And one of them is Amazon. And obviously the cloud business is huge, but it's interesting that the company's commentary has been that tariffs are not having a big effect there, which seems sort of counterintuitive, Lisa. What do you make of that, and why is this one of your picks?
So it's one of our picks, again, big and very compelling at the moment. It's the leader, as you said, in the cloud computing space, as well in the retail space. On the retail side, again, it lagged year to date because investors were seeing the retail side of it and the tariffs front. But Amazon especially is very, very great and has a history of finding efficiencies, having great supply chains, great distributions. They are very efficient in distributing their products and all of that, and changing from country to country. So they're very effective in that. Again, a large part comes from the cloud computing business here, so it's very diversified. So that is really positive here and why it's our pick. because despite it still has a larger revenue stream from retail side, it trades at the cheapest it has been in over a decade. So that is very compelling here. And we saw it on Amazon Prime Day, which was again very positive, a little longer this year than normal, but they really show that they're great in distributing, they're great in finding efficiencies in inventory managing, right? They have AI integrated in that now, which helps them as well. So that is very positive on that retail side, I would say.
Another one of your picks is Alphabet. So you must be happy this morning following the earnings, seeing the shares get a little bit of a pop. That said, Alphabet shares have largely gone nowhere this year thus far. Is this the thing that is going to catalyze a more significant move higher?
Yeah, definitely. So it was a beat on the top and bottom line, and especially across all business lines, right? When we look at cloud computing, when we look at YouTube, and I also want to mention here Waymo, right? It's not a big part of revenue as of now. It's a very small part, but they have the cars on the street. There's a lot of frenzy about robo taxis, and Waymo is really the leader here. When we look at valuations of Tesla, which is mainly based on the frenzy of robo taxis, but there's not much there yet. Then we see when we look at the valuation of Alphabet that this might be a little bit underestimation because they are very far ahead in that space, which can again diversify revenue streams going forward, maybe a little bit away from just the search business, which we have to get used that Alphabet will face a little bit competition there going forward. So that is very positive and a compelling story. And when we look at valuations, this is really the place where you want to be right now.
And just quickly, your last pick, and this one not sort of in the same category as the others, it's Quanta Services in terms of sort of name recognition and whatnot. But this is an infrastructure specialty contractor. Why do you guys like this one?
So we like this one especially because it's the leader in infrastructure specialty services, right? One of the largest in the US. And when we look at infrastructure build out, then we also have to think it's not only important for our daily lives, it's also important for the AI build out. And one of your guests talked about that 10 minutes ago, right? AI build out does not only benefit the hyperscalers who are actually building it, it benefits the whole value chain of AI. And Quanta Services is one of that, right? Because we need the build out for being able to produce the energy needed for AI going forward, and Quanta Services is really on the forefront of that. It had a run up lately, so people are recognizing that it's a great pick and a great place to be, but there's still growth prospects ahead that we think it's a great story and a great place to be, to play a little bit the backdoor AI story, but in a different industry to diversify yourself.
Lisa, thanks so much. Appreciate it.
Thank you for having me.
That does it for Morning Brief. Much more ahead on Yahoo Finance, including opening bid with Brian Sozzi.